Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
What's going out there? It's July 1st. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. So we have Adidas, Ben & Jerry's, Coca-Cola, Clorox, Denny's, Eddie Bauer, Ford, Hershey's, Honda, HP, Levi's, Mass Mutual, Microsoft, Pfizer, Starbucks, Target, Unilever, Verizon. What do all these companies have in common? Anyone? Give you a couple seconds. Bueller, anyone? They all pulled their advertising on Facebook in support of Stop the Hate for Profit movement. I love these corporations. I admire them so much. Suspend your advertising and go out of your way to support such an amazing cause that you care about so much. Man, the hypocrisy here, it's fucking awesome. All right, let's start with Coca-Cola. Coca-Cola. Not only you sell one of the most unhealthy products on the planet, that leads directly to diabetes, but here's a company that has a very long history of having racial discrimination at their company. Paid over $200 million to settle racial discrimination suits dating back to 2000. They're also getting sued right now for lying about its recycling process. But hey, let's drop Facebook. Throw them under the bus. No more advertising. Need to stop the hate. You have Clorox, who settled a lawsuit because it was only filling their bottles at 80% capacity. So a company that intentionally deceived its customers. Also settled a lawsuit with the EPA since it lied about one of its disinfectants that's used in hospitals. Studies found out that the product didn't disinfect anything. But hey, Clorox, you throw Facebook under the bus. We're supporting this movement. And we're doing it publicly. We want to make a public statement that we're doing this because we're not doing it for ourselves. We want the whole world to know that we're doing it. Pfizer, you got to be kidding me, Pfizer. Pfizer dropping Facebook. It's kind of like me getting mad at someone for cursing. They're ranked last among the top 17 drug makers for reputation, who agreed to settle cases over illegal marketing and healthcare fraud. Healthcare fraud, right? Who in 1996 conducted an unapproved clinical trial for his drug Trovan. And that was on over 200 children with meningitis. And of course, they did this in Nigeria, right? They don't know what to find out. Where 11 kids died and dozens more were left disabled. Way to go, Pfizer, right? Stop the hate movement. Hashtag. There you go. Verizon, who paid $4 million to settle claims that a third-party debt collector made robocalls on Verizon's behalf to people who are not even Verizon customers. They paid $4 million. They probably made over $20 million doing that. But hey, you got to pay $4 million. They're okay. They're cool. They're a great company. Settled lawsuits for deceptive billing practices, charging its customers for in-network minutes that were meant to be free. Also settled with the FCC and again, fraud, that word fraud case, where Verizon received excess payments. This is great. From a subsidized program that allowed internet access to schools and libraries. They took advantage of that to make money. And they paid a lawsuit, not a problem, because all these lawsuits, as you know, they make a lot more money off these lawsuits than they have to pay. It happens all the time. It happens in Wall Street especially. And then we have the king, which is Microsoft. Holy shit, Microsoft. That tracks information on every person that uses any of their products, right? Office, Xbox, all the computers with Windows. Biggest invasion of privacy ever. And you try buying a computer with Windows, which is most of you, right? Most people use Windows. Not really Mac Safari, but most use Windows. But go through the start process of setting up your computer and do yourself a huge favor. Please read everything. Don't just click yes because you're so excited you bought that new laptop and you want to get it to work right away. Just go through it. You're going to see things like file sharing updates, right? These are the default options, right? The default. These are the default. So if you don't change them, these are the options. The file sharing updates with third parties, notifications all the time. You have that smart ad menu come up all the time, targeting ads from third-party apps for your browsing activity. And Microsoft will even give you a unique advertising ID. It says it there. You don't know that. This is ID those third parties could identify you with, especially with apps from the Windows Store. All this stuff is turned on when you buy the computer. You have to shut this off. Isn't that amazing? Cortana, setting that up, getting to know you, collecting information, speech, handwriting patterns, typing history. That's not creepy. You got to shut this stuff off, right? You're required in that stuff. When you get a new computer, you have to click off, off, off. So the default is all this stuff is on. They're going to share everything with everyone. That's Microsoft for you. But hey, throwing Facebook on, stopping advertising, stop the hate movement. I mean, you have to be kidding me what's going on and with these companies. And it's always got to be public. Like they have to make sure they let everyone know, right? The CNBCs and the ABC, everybody just, hey, this is what we're doing. We have to let everybody know. They're not just doing the right thing, right? It's like someone that a famous athlete that, visits sick children and brings a camera with them. This way they can take pictures to show, how great of a guy I really am. Or like the person on Facebook that always has to write about how their spouse is the most amazing person, which is usually going to lead to, divorce within, I think, a time frame on average, probably 3 months. If you really need to tell the whole entire world on Facebook or social media how great your partner is and how much you love them, it usually means you're getting divorced pretty soon. And then you have Ben and Jerry's, who have no idea why they're doing this. They're on this list. I mean, seriously, Ben and Jerry's, you're not going to get any points from suspending ads on Facebook other than lose tons of revenue. I mean, nobody's like, hey, I'm buying Ben and Jerry's ice cream from now on since they're boycotting Facebook. No, why? Why even make that announcement? Ben and Jerry's, give me a break. Seriously, these companies are a complete joke. I mean, everything is fake out there these days. It's disgusting. If you really want to do something meaningful, if you really care, right? If you really care and want to support a cause, why don't you get back all the money you made through advertising on Facebook and donate those billions and billions of dollars to stop the hate movement? That would be pretty cool. Take it much more seriously, much more sincere. That ain't happening anytime soon. You know as well as I do, right? Corporations need their profits. That's the way they do it. But we're in a world that's so reactionary. Like right now, I mean, Black people must be looking at the world and saying, what the F? You got to be kidding me. Hey, here we have a massive movement, everyone coming together, bringing awareness to racial injustice with the hopes of ending racial discrimination, respecting one another. Every American needs to be treated the same. All great things, right? All great things, and so many of us support in America. But now it's like super over the top. You have companies, the public statements, the media companies, holding special magazines, are putting Black people on their covers, and all the talk shows are not just, talking about racial injustice every day, but the hosts are wearing like Black Lives Matter shirts, right? ESPN, every interview, racial injustice. Nickelodeon hosted a racism special educating our kids on how Black Lives Matter, but it was like just an over-the-top massive event with celebrities. And what's next? A Black SpongeBob SquarePants? I mean, to really throw it in your face? But Black people have to be like, really? I mean, most of you, all of you, so many of you didn't support this at all 3 months ago, right? Pre-George Floyd. And yes, the world needs to be aware of what's going on, and this is a great event, not to the point where so many companies and media are intentionally making it sure it's in your face that they support this. Hey, we are behind this cause. No, we're really behind this cause. We're really, 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 really behind this cause. To the point when they're not being themselves. They're being completely fake. And the best example of this is our politicians. And they took a knee in tribute to the death of George Floyd. Took a knee. And made sure the cameras were rolling. They had the perfect angles. Made sure that they sent this as many media places as possible. This way it went viral. Because, hey, we really need that Black vote this election year. And there's a lot of Black people who spoke out about this, saying this is a joke. But they even went a step further, where you saw Schumer and Pelosi dress up an African kente cloth, right? Which it made sure was super bright so everyone could see it. But I'm going to let you in on something. A little history and culture here. So kente cloth comes from Ghana. In that country, bright colors are associated with times of celebration. So by wearing those bright clothes and kneeling, you were actually celebrating the death of George Floyd. You were cheering it. What you should have done is did a little homework on it and dress up in black and red. That's the type of cloth that's used to symbolize death, to honor death. But hey, I mean, who gives a shit? We're only talking about insulting someone's culture where this clothing has been associated with for over 400 years. Hey, way to mess that one up. But even better, I saw Pelosi, and this is not Democrats or Republicans aren't doing anything either. I mean, they're just sitting on the sidelines not doing anything, which is why they're probably going to lose this election. At least speak out or take a side. Don't do nothing. But yeah, Pelosi was holding a press conference about George Floyd. And this was a couple of days ago. This is June 26th. It's supposed to be about adding George Floyd's name to any new legislation that's going to be passed on racial injustice. In the press conference, this is the press conference she held. She said, it's already recommended to the Judiciary Committee and the Congressional Black Caucus that the only way this legislation gets passed, again, this is me quoting her here, if you tell me that this legislation is worthy of getting George Kirby's name on it. George Kirby. Who the fuck is George Kirby? It's George Floyd. You don't even know the name of the person. You don't even know the name of the person that you're kneeling with, that you're starting this movement and how, your party supports this. You don't even know the name. You got the name wrong. This is a couple of days ago. And this isn't like, oh, it just happened and maybe, okay, let's get all the facts because we really want to jump on this story because we needed these votes. But really? You don't know the guy's name? You're kneeling? We're in clothes. They have no idea what they symbolize. They symbolize celebration. You're supposed to be honoring George Floyd's death. I mean, look at our politicians. I mean, you talk about scum of the planet. I mean, they can do anything they can to get a vote. I mean, if you're black, you should know this. If you're white, you should know this. No matter what gender, you should know this. Whatever you are, you should know this. I mean, they're going to throw anyone under the bus to gain power. They don't care about racial injustice. They don't care about anyone. They don't care about the people who's going to vote for them. And you know what? It's not just our politicians. I mean, how many groups have used George Floyd as an excuse to further their agenda? And the violence, the looting, the chaos, Antifa, taking over neighborhoods? In the United States, you take over neighborhoods? Are you crazy? Ripping down statues of people who actually helped free slaves and were against slavery. Yelling directly in the faces of police officers, most who risk their ass every day to make sure that you're safe. And they also have families and children of their own they support. But you're taking out the anger on every single police officer? Really? Every single one? And it doesn't even matter. It's not racial. It's black. It's white. If you had that uniform, you'd get abused out there. You get yelled at, and they cannot fight back. You steal a cop's taser. You fight. You resist arrest. You still take a shoot at him, then the guy gets shot, and that guy goes, the cop goes, are you kidding me? And look at where the crime rates are here, guys. Look where they're going. It's insane, the numbers. You're looking at cops retiring early now. Who the hell wants to be a cop? Do you really want that? And if you do, look, I live in Florida. I grew up in New York. Guns are not legal in New York. In Florida, they are. I still don't own a gun. I'm thinking about getting a gun. I truly am. And I'm not a paranoid person. I'm not scared, but it's my family. What are you going to allow? And are we going to be able to call police where they're going to show up? Because these police forces are going to shrink tremendously in the face of rising crime in every state across the board, just about. It's pretty scary. But I just love how over the top we get, how everyone suddenly cares about racial injustice when so many of our politician corporations really couldn't give a fuck about George Floyd before this. In the end, what are they doing? They're reacting to polls. That's what politics is all about, is polls. Like the one taken by Edelman. This is a couple of years ago. Global Community, basically a firm that helps companies with their brand, promote their reputations, global communications company, right? Edelman, that's what they list themselves at. They poll showed 64% of consumers will reward firms which they see as engaged in some kind of activism, which we're seeing now. But even a more recent poll, and this is really serious, that's why you're seeing all these companies publicly come out and make sure that they're saying it to the masses where you're going to hear it. Because recent poll shows 87% of Americans would purchase a product from a company that advocated for an issue they cared about, while, and this is the big while, 88% would boycott a company they thought behaved irresponsibly, which is the reason why everyone's throwing Facebook under the bus right now. It makes sense. And I'm not defending Facebook here. I'm just saying the companies that are throwing them under the bus they don't have the best reputations out there. I mean, come on. We can all agree on that. And those reputations result in them making tons of profit. So I'm not telling you to avoid those stocks because they're probably going higher because they get away with everything. It's fine. Those are the companies that donate the most money to our politicians. If you look at these companies, the massive settlements for racial injustice, just love those public statements about suspending advertising with Facebook and all this. But, but as a Black person, how do you not look at this and see complete bullshit where so many people want to use your movement, this important movement, for their benefit or to service their own agendas? And it's sad. It just shows how our country, America, I mean, losing direction, going through some pretty crazy times. And I hope it's just because it's an election year, and I hope it is going to stop no matter what party gets elected. But man, the shit that's going on right now, I mean, things that I never saw in my life. And I don't know if I can speak to someone who lived in the 60s and the 50s and stuff like that. But right now, holy cow, man. Everybody gets used for everything just to further their agenda. And it's right in front of your face. They don't even care. They don't even care. Which, this topic, is what we're going to talk about. My next guest, someone you all love. His name is Andrew Horowitz, who is the host of the Disciplined Investor podcast, the second best financial podcast in the world behind this one. Andrew is a close friend. He's been doing a podcast just as long as me. We laugh at it now that everyone has a podcast, but someone that I admire, that, close friend, know each other for a long time, incredible entertaining, loves breaking down the markets, talking stocks. Again, a lot of this stuff that I talk about relates to your investments. It relates to the election. What's going to happen if a Democrat gets into your investments? What's going to happen if Trump gets reelected? This matters. What's going on right now matters for your wealth. The only thing you need to care about, right? Not the only thing, but the most important thing is that generational wealth. Is how do you make things better for you and your family? So this stuff matters. I don't care if you're a Republican, I don't care if you're a Democrat, whatever. What's going on right now, even if you're part of any party, is pretty disgusting. And it's going to get a lot worse as we approach November. So Andrew and I are going to break down that part, how it relates to your investments. Going to also share, like he always does, his favorite ideas. And he's got a pretty good track record, so definitely listen up. In my educational segment, I'm going to break down the huge breakout in gold. I'm not talking about prices that are now at 1,800, right? We're floating at 1,700, almost at 1,800 back and forth. But, prices have been gradually going up slow. But the breakout is now in junior mining stocks, which are on fire. And when you have a market like this with junior mining stocks, and many of you have not seen this because it's been such a horrible market in gold for such a long time outside of the last 12 to 18 months. But you talk about 5, 6, 7 years since 2011, the end of 2011 and 2012, it's been so horrible. But when you go through these markets where you have bullish times in this cyclical industry, these companies are not ones that go up 1x or 2x. They go up 5x, 10x, 20x. And especially with the downfall, the biggest decline we've seen in history when it comes to this stock, one of the worst conditions. This comes from great people like Rick Rule, who've been in these markets for over 40 years, saying that downturn from 11 to 18-ish, wherever, one of the worst he's seen in his 40-year career. And now it's reversing. We saw the majors do very well. We saw the royalty companies doing well. Now I'm going to tell you why. Junior mining stocks, this is probably just the beginning. You still have plenty of time to get into these names that are down tremendously from their all-time highs. But they are hitting new 52-week highs, and it's still time. You still have time to buy a lot of these names that have huge upside, and I'm going to share some of those names with you in my educational segment. Before we get to that, let's bring in my buddy, money manager, stock analyst, and owner of a very large boat. He never invites me on for some reason. I'm going to ask him about that in the interview. But let's get to my interview with Andrew Horowitz. Andrew Horowitz, thanks so much for joining us on Wall Street Unplugged.
Hey, always a pleasure. By the way, Frank, I love your daily live videos on Twitter. That is just something.
Oh, thanks, man.
Doing a great job.
Yeah, and you can thank the guy who's taping this for us, who helped me out with that technology, who's Garrett, and yeah, it's just been amazing for us that we could share the screens and educate people, and it's resulting in a lot of people signing up, and it's pretty cool. It's just
It's also the educational component. I mean, we've been doing, so one of the things I've been doing is this Monday pop-up Q&A webinar where we do it through like a Zoom platform through webinars, and anybody's invited to come and sit in on a quick recap of what's gone on in the week, and then ask any question that they want. And it's, like totally jam-packed up to the level of my subscription for the webinars each and every week. So people are really, I think, yearning for that kind of information, don't you think?
Yeah, I think so. Well, people don't have access to the things that we have access with. We've been doing this for decades, especially research engines that we pay a lot of money for and stuff. And so we get, like, I could see the debt that's due on any single company in 30 seconds, right? Over the next 5 years, and a percentage of how much you generate cash flow. We see this stuff so quickly that I think when, you just have Yahoo Finance or a couple of like Finviz or something, I think people really appreciate it. So yeah, that's good. And hopefully more analysts keep doing it. I know you've been doing it too and doing a great job. So
yeah.
And now in this market, right, where you mentioned it before we got in the air, nothing is normal or back to normal except for the stock market. So what's going on? Can this continue? And I'm just going to throw one thing at you because I know you love the economy. We always talk about it. We looked at May, personal spending up 8.2%, but yet May personal income down 4.2%. You just got to think about that for a second, guys, right? People are generating less but spending more. Why? Because the government is handing out checks. So could this continue? Because now we have this, it's not a second wave of the coronavirus. This should be expected. We're letting more people out. More people are going to get it. We don't have a vaccine for it. So we have to develop herd immunity. We don't know if vaccine could take 12 months, 18 months. And we all know that we can't just close the economy and everyone stay home for 6 months. That's going to be more damaging than ever. What are your thoughts on what's going on? And can the market continue on this road of, it's not a recovery. I mean, we're trading at all-time highs pretty much right now.
There is a total dysfunction when it comes to trying to understand what the numbers are for the stock market and with the economy. The problem is that there is an inability for any analyst to properly predict right now the information with regard to the economic analysis, because it's almost like there's a lot of data points that have been created out of midair all of a sudden that are not allowing for normal calculation. And as such, there is this kind of question of, hey, wait a minute, if we are going to open up and if we do see a V recovery or rolling W's, which we think is more likely, eventually, maybe 2022, we're going to be back to quote unquote normal. And why not just put the money in the markets right now, find decent stocks that can withstand all the problems and pressures, and with all of the excess stimulus that's being pushed in. I mean, we're talking about multiple of trillions of dollars, not just here in the United States, but around the world. And that liquidity that's being created out of thin air and it's trickling down into various markets, whether it's the bond market or the stock market. I think there's a euphoria out there. Plus, you have to realize that by their very nature, there's a lot of gamblers out there, and there's not a lot of places to gamble right now. So they're putting the money into the stock market, which is an open and running gambling process on a daily basis. At least that's how they're looking at it. So, I mean, I think that there is a lot of optimism built in. Every time we get a good number, things really do well. A bad number is like, okay, it's, not so terrible. We're not really worried that we see this major spike in Texas and Arizona and Florida, and that the EU is saying, hey, United States, you can't come here. And New York, New Jersey, Connecticut saying, hey, you know what? Hey, we don't want you flying in here. If you do, you have to do a 14-day confinement or quarantine. So there's a lot of mixed messages that are happening here. But I think what the one thing that is the base of all this is that the hope for recovery sometime in the future, whether it be a natural process or pushed in by the government, is helping the markets that may be totally entirely dislocated from the economic reality, which is a little weird. And I don't know if that's going to really come back to normal anytime soon.
So here's a $64,000 question here. So how do you position your clients? Because right now you're seeing more money on the sidelines than ever, right? In money market accounts, and it makes sense because you're a retiree and you're giving advice to these people. It's hard to tell them to buy Disney at 240 times forward earnings. It really is trading at 240 times earnings, and that might be cheaper than expected because I have no idea how they're generating earnings right now with everything closed. And you're looking at casinos, you're looking at cruise lines, you're looking at airlines, where now at least you're seeing separation where you have the Deltas and the Southwest are in much better shape than the rest of the industry in terms of the balance sheet. But what do you tell your clients? Because it's almost like you're basing it on the hope that the Fed's going to continue to extend checks, right? Which in July, they extend that the small business loans, continue to buy bonds in this market, something that we haven't seen ever, right? I mean, we saw a little bit about just in finance and they back to finance. I mean, guys, just to put in perspective, and you notice, Andrew, that TARP was originally 700 billion. They only used 480 billion of that. We're at 6 trillion in monetary and fiscal right now, and we're not even close to being. That's 30% of GDP.
30%.
So what do you tell your clients? Because you're basing this on something that you're hoping that has to happen because you have to buy stocks that, I mean, I thought Shopify was expensive at 2,500 times forward earnings. Now it's at 5,000 times forward earnings because it doubled. What do you tell your clients?
So there's a couple of different things. First of all, we're flying blind. Let's just get that straight. We are totally flying by instrumentation only, right? The ILS, I think it's called. Systems that are going on right now. We don't know. I mean, FedEx came out with earnings and they blew past estimates by a really wide margin. But I looked at this and from what I saw, that the FedEx earnings that came in at $2.63 a share, they were like 91 cents above estimates, and they saw a little bit of slowdown on revenue. They're not putting out guidance. Last year at this time, they were at $5 a share. So they had a 50% cut in their overall earnings. Stock is trading at about $155 a share. Last year at the same time, it was $170. Stock is only down about, 10, 12% from where it was. Meanwhile, their earnings are down 50%. So that's kind of a little crazy. Well, what I'm telling clients is that we have to do a couple different things. First of all, we do this whole 1 foot in and 1 foot out concept where we're going to play along, but we're not going to be crazy about this. We're going to be satisfied with getting a decent return, having a lower exposure to equities, trying to position ourselves in a way that is not going to get our heads chopped off in the event that something happens that mimics reality versus what we're seeing now, but at the same time being a part of it because it's not a short-term game. The second thing is I think that you have to realize is that, from time to time in our trading portfolios and the managed growth strategy that we have, we do some hedging. So we're short the S&P against long positions of equities right now. We have a small position short, for example, Roku recently, and we have a short on Shake Shack, and we have longs on, for example, let's see, what was the long that I was looking at recently? Oh, so we have a long trading position in for example, I'm drawing a blank on the name. Anyway, we have kind of a mixed bag in our portfolio. 1 foot in, 1 foot out on all sides, and a little bit more of a conservative posturing right now for our other portfolios, and clients are really happy with that. We don't need to necessarily get all the return of the S&P 500, what everybody's always talking about, as long as we don't take the downside either. So we're kind of positioned that way because these unknowns that we have right now, if I can't tell you, Frank, if I can't give you good reason and good rationale for a particular stock or for a sector or for the market itself, and I can't explain why we are there without saying, well, we're just hoping that this is going to work out, I'm not doing my job as an advisor. So I make sure to keep that really tight.
And that makes sense too. I mean, because, and that sets it up for this question too, is even the long names that you're looking at, I mean, what are the next winners in that post-COVID-19 world where, you mentioned to me that, hey, we already know the stay-at-home plays. We know that they've been well. We're seeing a lot of the biotechs really, do well. They did well already. They pulled back a little bit. The biotechs associated with vaccine. Now that coronavirus actually, we're seeing spread again. We're seeing a lot of those names go, move higher. But what's the post plays? I mean, is the Nasdaq deserve to be trading where it is, where there are a lot of software companies? There's a Zooms that make sense. The Zoom numbers, yes, it's expensive, but those numbers were incredibly explosive that they reported. Yep. They've been growing like crazy. Good for them. That's what they want to see. As long as you have that growth, you're going to have that high premium. But what are the next winners? I guess that's what all of us want to know.
So I think that you have a lot of things going on, like a FLIR as an example, a company that does thermal imaging. Interesting possibility there for the placement of various devices in, whether it's in casinos, whether it's in hotels, restaurants, or airports, cruise lines, to make sure that people are not coming in hot, feverish. A company like Train, the old Ingersoll Rand, which does various heating and cooling for buildings and for homes, whereas, you're going to have a filtration system. I mean, just today, New York said, hey, you know what? We're not really even thinking about reopening dine-in restaurants. And I think New Jersey yesterday said something about they're holding off indefinitely on opening up the dine-in restaurants. So a company like a Train, TT is a symbol there, we just started looking at this. The idea about sanitation, cleanliness of air quality, air filtration is kind of an interesting thing. Autonomous driving, the whole concept there. Recently, a big purchase by Amazon, trying to get into that realm where you can have deliveries with people that are not there. I mean, just autonomous driving of deliveries or of transportation. I mean, there's a lot of potential winners and losers. I'm having a hard time, though, necessarily trying to handicap all that, because you wonder whether or not once we get back to normal, if a lot of this stuff, if we have a short-term memory, because we do have a short-term memory. We know that, right? I mean, we go through these processes and remember back when that nobody wanted to invest in banks for a while, and then all of a sudden everybody wants to invest in banks again. And nobody's going to want to invest in cruise lines or airlines for a while, but then, time will go by and they'll invest in those again, and they'll go on those again. So I think there are some winners and losers in all of this. The big loser that I see is probably commercial real estate in the metropolitan areas. The winners will be those companies that are building for the deurbanization process, possibly throughout the country, where people are saying, you know what, I don't want to live in these metro areas. Restaurant chains are going to have a long time getting back to where it is. Movie theaters are going to be a problem. So, there's kind of a lot of this one's going to be a problem, but this one's going to benefit. This one's going to be a problem. And that's why we're seeing kind of a bifurcated market right now. Whereas the NASDAQ, the growth stocks, the technology, the healthcare, biotech is doing really well. Your oil companies, your banks, consumer staples to a lesser degree are not doing as well. And then in between all that, you have your consumer discretionary that who knows why Gap was up 75% last week. A lot of rumors and things going on there.
Kanye West.
Well, yeah, woohoo. So I know I'm buying some Gap clothes now. But, there's, I think, a grouping of winners or losers, at least that's trying to be handicapped by the market at this present time. But there are some long-standing changes that are going to happen in the next version of the world that we're in. And I think there's going to be a lot more focus on health. The whole idea of being cooped up, locked down, not able to go out and do what you want to do. I don't know about you, but, this was supposed to be from March to April. Remember, we were supposed to reopen on Easter, the grand reopening. We're in July. I mean, this is much longer than was anticipated getting back to normal. And now we're seeing rollbacks in Texas and Florida and Arizona, Georgia. But it seems to me that we're going to be pushed more towards online. Markets are telling us that. Much more towards software as a service, much more towards entertainment at home. And possibly travel locally. That's why you're seeing a lot of sales of those Winnebagos, boats. Can't get your hands on boats down here.
Even cars. I mean, they say some car dealerships said they're going to close 4th of July because they have no inventory. I mean, people just are not taking public transportation. You can't really take airlines. They're nervous. So, hey, just throw everyone in the car and let's go someplace.
Let's go. Exactly.
I mean, it is amazing. It really is amazing to see what's going on right now. But so let's talk about something that's going on right now. I had a big rant on it before I meant to, which is the social media. You call it. I think you mentioned it, day reckoning. I just love the hypocrisy.
Did you say
all these companies?
You're talking about the sewer media?
Yeah, I'm talking social.
Oh, I thought you said sewer media.
No,
I call
social
it sewer
media. Facebook. It's the same thing, right? And
right.
We're on these platforms. I see it as well. I just block so many people because it's just it's just crazy. It's unbelievable. But anyway. Yeah, the hypocrisy behind these companies that are coming out, like the Coca-Colas, the Pfizers, the Verizons, the Microsofts, and all the racial injustice lawsuits that got launched against them and settled, and all the fraud. I just think it's amazing. But Is this a big deal for Facebook? We saw the regulatory issues with Facebook, and hey, they overcame it. With this, with a platform where everyone is telling you exactly where they are at that second and what they like, what they don't like, and you have basically, it's, what is it, 30% of the world's population on it, when you include Instagram. Is this is this going to be a trend that's going to continue that could really hurt Facebook, which is going to hurt them now? Or is it just like, hey, you know what, this is just a flavor of the day? And a lot of companies, of course, they're not making these announcements. They're making them as public as possible because they see polls saying that, hey, if you support, you know, whatever it is, we'll, you know, again, I covered that in my intro. But what are your thoughts on social media companies, including, you know, Facebook and Twitter?
So I think what you're talking about is the idea that, or the question of whether or not this is a real revolution or if it's just virtue signaling by many of these companies that are saying, you know what, we're going to pause. Now that's the key word right now, right? We're going to pause our advertising on Facebook until when? I don't know when. Maybe it's a combination of two things. I think it is some virtue signaling by these companies trying to get in the good graces, you know, the whole ESG thing. I also think it's really good and convenient timing where these companies need to pull back on some of their advertising. So it doesn't make it look like they're doing this because they're hurting, right? So it's a really convenient time for Clorox to say, you know what, we're going to postpone and cancel or pause our advertising through the end of 2020. And it's like, oh, you're doing it because you want Facebook to be fixed and you want to stop all the hate speech and all the misinformation rather than, oh, wait a minute, whoa, wait a minute. Are you hurting and you want to clean up some of your expenses? So I think there's kind of a question there. I do believe that Facebook is one of the best, I don't like it personally, but one of the best places to advertise because you have targeted advertising. Where else are people essentially providing you all of the information about themselves, where they're going, what they're doing, who their friends are, what they like, what they don't like on a regular basis, where you could just sell to advertisers and totally target market them. So Facebook has that whole process done better than anybody else. A lot of the analysts that are coming out recently have said, hey, you know what, this is not a problem for Facebook. Now, I don't know how it's not a problem if we have companies like Starbucks and Clorox and, you know, the whole litany of companies that have said, you know what, we're pausing at least for a month, if not longer, all of our advertising on Facebook and Instagram. It's got to hurt. It's got to be a problem. And Facebook already told us that there's a problem time and time again with a slowdown of their advertising and a requirement to build up in terms of expense-wise their overall core grouping to combat this. So we are entering into a political season where it's going to be a lot of political advertising that's going to be spent on that, but yet they may be doing a lot more censorship. So I think the bloom is off the rose a bit for Facebook. I don't know if it's going to crater the stock and be the next MySpace. Twitter, there's much less targeting of advertising available on Twitter. I mean, you know, I think that, you know, they have some information on you, but it's very, very minor. Maybe their algorithms can pick up who your friends are and start to build a bit of a structure around where you are and what you like and all. But, you know, you look at that, Snap, questionable. Instagram still in its infancy of trying to get the advertised, but there you have a much different situation. There you have a lot more people that are being followed for, you know, people like to follow that particular party. So all they have to do is themselves advertise something and the buying goes on. So I think this is a big hiccup for Facebook. Seemingly the markets and the analysts aren't that concerned. I am hoping, and I'm hoping with a squint, because I don't think it's going to change, but I'm hoping they do change the platform to a point that there is less hate, there is less misinformation, but I don't think the probability is that will last very long. And I think the only thing that we have to look at now is the potential for regulators to really get in there and do something. And I'm not sure what they're going to do, but there needs to be some changes, but I just don't imagine in the world that we live in, there's going to be that many changes that's going to hurt Facebook. There's really no other alternative. I mean, people are not going back to legacy TV to advertise, are they?
No. And you bring up a good point, Andrew, because it's when you market, it's usually a percentage of sales, and most companies are seeing a decline in sales, so they have to cut their advertising budgets. Where you're going to see sales explode for some companies, maybe the Microsofts and software companies and Amazons and Walmarts, but most companies are seeing a decline in sales. I mean,
right.
So you're going to see that. You saw that on platforms, on even the bigger names, not so much at the social media, it's advertising platforms, but just into public groups, that got killed and it came back a little bit. But yeah, no, it is interesting to see. And I know a lot of people own these companies and looking to buy Facebook on a pullback. Again, our job is to talk about stocks and everything. And we understand.
We own by the way, I own Facebook for our managed growth strategy. And the reason is that the consistency of earnings, the quality of earnings, the growth rates, the comparatives, the margins, the margin expansion, the ability of a company to make money is there, even though I don't like the company at all. We own a small piece of it for client portfolios.
So let's move on. I want to talk about two more topics here. One, I want to get your ideas like I always do. But before that, let's talk about the election. I mean, it's meaningless now to see the polls have the Democrats winning. But if there's a Democratic sweep, is that priced into the markets? Because we are going to see, taxes are going to be different. Gun rights may be different. Defunding police departments might get even more aggressive. There's definitely a different agenda, just like if, guys who support Democrats or Republicans or whatever, if Republicans win, then you're going to see, whatever agenda. But there's a lot of things that are going to change, right? Especially with a Democratic sweep, which is pricing it in right now. And again, that's meaningless because there hasn't been any debates. But talk about your thoughts on the election and say if Biden does win, are we going to see a big impact on the markets, you think?
So remember something, that when we were handicapping the last election, the idea of a Trump win.
It was so wrong.
Right. Well, for 5 minutes, we were right. And then it was all over, right? Because what happened was that Trump came in with all this radical ideas and all these things that were going to happen. Markets freaked out. We did see a drop of the futures on the election results that locked down the futures for a moment. Then Trump came out like I don't know what it was, 3:30 in the morning or some ridiculous time, talking already about tax cuts. And the agenda the Republicans were supposed to have, which was supposed to be to rein in the Federal Reserve, to bring interest rates up, to take down the debt of the country, that all turned on a dime into, you know what? Let's just have a Federal Reserve that has a lower interest rates. Let's push them to the limit on that. Let's then go from there, and we're going to have a tax cut for corporations and somehow benefit the individuals, which didn't really play out, but okay. And then it's turned into almost a modern monetary policy, a theory type of government where the spending is more with this administration, even before the coronavirus, than it was with any other Democrat in history. So we have a lot of spending that went on. We have tax cuts that went on. So there was a big change. Now, if a Democrat comes in and if there is a Democratic sweep, is there going to be a rollback of the taxes? Is there going to be an increase in that? I mean, I think that's what they talk about, but Democrats have really never been able to do that. When's the last time a Democrat really raised taxes? Very hard pressed to do so. When is the last time a Democrat reined in spending? I don't see it. Now, if you want to say, well, they'll be more responsible, I don't even know how the most I don't even see how the most fiscally responsible person at all right now could even look at the economy where we are in the whole and say we have to rein in spending. It doesn't make any sense. The economy is running on
You're going to say everything to get elected. You're right. You're going to say everything right now to get elected. But
yeah. So I mean,
there's no way you could raise. Not right now with the economy this bad and saying you're going to cut spending and raise interest. Interest rates have to stay low. They have to stay low.
Yeah.
On the balance
I agree.
sheet right now. So, and they're smart about that. They'll talk to them, but again, talking and doing are two totally different things. No matter which party you support. But
I won't even try to get into who's going to win and who won't, and what is going to be the situation. I don't really know, unless there's a big reversal in taxes and interest rates change dramatically, and we pull back spending in an incredible way. I mean, maybe that would do something, and it would obviously. But I'm not ready to call that being their platform because, to be honest with you, neither President Trump nor Biden has come out with a platform yet. It's just a big rally, yoo-hoo, let's go, let's get it done. The other guy's bad, I'm better, but we're not seeing any platforms.
Yeah, if guys, you listen to me or even Andrew, I mean, when it comes to the consensus and being a contrarian investor, I mean, listen, the consensus right now is for the Democrats to win. If they win, the market's going to crash. That's the consensus, right? But the consensus was when Trump was going to win, the market was going to crash due to uncertainty and gold was going to surge. Right. And there's no one that said, oh, I hope Trump nobody. I know. I cover the markets. I cover everybody out there. I didn't see any headlines. Wow, if Trump wins, this market is going to right. surge. Nobody said that. So the fact that we're saying that, again, that consensus probably means that if Biden does win, it might be very good for the markets if you're a contrarian investor. So just, you want to bring up the positives and negatives, but everybody got that wrong. You're right with Trump, including me. So, it's just amazing that the markets continue to move higher here. Okay, last thing here, and thanks so much for staying on for so long. Usually we try to keep these things just 20 minutes. It's a little bit longer, which is awesome. Thanks, buddy. Some of your favorite plays. You mentioned Train Technologies as one. I like that. Air filtration and just that's a good play. You're looking at anything else? I mean, I know you mentioned usually, we provide bullets to each other when we're interviewing, and you said, Lululemon's purchase of Mirror was very interesting. But what are some of the things, individual names that you could share with some of our subscribers? And some of them you already shared. So if you have any more.
I mean, Lululemon is interesting. I mean, this is a company that has done really well. It's really has great product, great history, great management. Recently bought this Mirror product for about $500 million, which is kind of stand in front of it and you squat and you stretch and you jump and you run and you punch and you do all this stuff. It opens up a really interesting now situation where that can be not a competitor, but an adjunct to the Peloton, where it's the same kind of thing. So you buy this Mirror for X amount of dollars and you pay $39 a month. So the company is actually very healthy. This is going to add to the bottom line of Lulu. And I think, though, there's a kind of the other side of the mirror, if you will, which is that gyms like a Planet Fitness, I just do not see how a Planet Fitness, which is a lot of a franchise, by the way, they're a big franchise operation. Most of the franchises make like 25 to 30,000 net afterwards. They have a big overhead with social distancing, with the issues that are going on right now, with the people's desire, first of all, to work at home. Well, you might as well just stay home and have my Peloton or my Mirror or my other, workout gym at my house if I can do so. I think there's going to be a trend that way. So I'm kind of like on a Lulu or a Peloton positive, on a Planet Fitness negative. I mentioned Fleer, of course, in that discussion as well. And Train is something that's kind of an interesting positioning. I mean, your healthcare, your various healthcare companies, I think, are also going to have a real good bid to them. Not the outlier biotechs, but the kind of core companies. Pfizer had a good announcement about something today. It popped the stock. You get to see that. I mean, I'm still a big fan of like CRISPR Technologies, which does genetic editing.
I've had that for a long time. Yep. Mm-hmm.
Yep. I've had that for a while. It's hit an all-time high just recently. Did a secondary this week. Stock is holding up really well. I think that's a really interesting play. Some of the restaurants that are like in Northeast, et cetera, like a Shake Shack, short, negative on that for the near term. So, the one thing can I just branch over to something that I want to talk about just for a moment?
Go.
Because I think this is something that, we've talked about the whole idea of what the Fed is doing right now and how they're, lifting up by buying ETFs, and now they're buying individual securities, and this whole idea of buying individual bonds. And they recently targeted and started buying Microsoft and Apple, Home Depot, Verizon, and Visa bonds. Now, tell me something, Frank. Do those companies have any problem going out to the debt markets and getting financing?
No, but those are the companies that are going to support the market and keep it high, probably.
Correct.
Spend, right? So
here's my thinking. The Fed goes out and starts purchasing this through an index-style investing. Okay, why do they kind of target these companies? Well, it's a backdoor bailout of the stock market because these companies are actively involved in share buyback programs. They could issue debt at very low rates now, take the money, and then do share buybacks. And when you have a Microsoft and an Apple and a Home Depot, for example, doing share buybacks, it's kind of like helps the market stay higher because most market indices are cap weighted. And therefore, when you move up Apple and Microsoft, the whole market comes up with it, right? So I think this was like another backdoor bailout, just like we saw a backdoor bailout of the banks with the PPP program, and the continuation of a bank bailout with the bond purchase program through ETFs, because the banks are a big part of what they were buying through ETFs and through their other various programs. So, the Fed has been very involved with a very heavy hand. The question is, when the music stops, are there going to be chairs for everybody? That's the big question right now going into, I think, the next couple of quarters. I don't know how much longer the Fed can continue doing this without some scrutiny, because we're already at a decent level on markets, valuation stretched, and just doing what they do doesn't necessarily help the economy. It helps out the markets. There's a lot more fiscal that needs to be done, and some of the fiscal is being done because, of course, of low interest rates. You can do so. So I'm just saying it's kind of interesting what's happening. Everybody should just keep their eyes open to the reality of what's really going on here, to understand that there is a safety net to a point, but once that stops, where do we go from there? That's a big question of mine.
Yeah, no, it definitely makes sense. And just to see, and that's how we're all thinking, like, how do we play this where there's a variable that never really existed to move stocks, where it's usually earnings drive stocks. Earnings are not driving stocks. Earnings are much lower. And now it's being pushed out, not through 2021, but to 2022 to get to pre-coronavirus levels. Yet a lot of these stocks are moving higher, which, is something that flies in the face pretty much of, 100 years of market research, which is pretty crazy. But talked about a lot, covered a lot. I love that you share ideas, and my audience always loves you because you always do so. If they want to find out more information about you, Andrew, how can they do that?
Go over to thedisciplinedinvestor.com. We got the Disciplined Investor podcast. We got the Friday. I do some technical analysis training on Fridays through our subsidiary called Trigger Charts. Also on Mondays, the pop-up Q&A webinar. If you want to register for that, just go over to thedisciplinedinvestor.com. And yes, we manage money, by the way. So if you're interested in having us manage your money, there's plenty of information on our various strategies over on TDI or thedisciplinedinvestor.com. So check it out.
Awesome stuff. And I'm still waiting for that invite on your boat. I know it's pretty crazy and I'll wear a mask, but I'm sick of watching those pictures of you catching massive fish. And I want to get out there with you. So just let me know when, okay?
All right. You're on. You're on.
All right, man. I'll talk to you soon.
Thanks.
Okay, guys, great stuff from Andrew. I always say this podcast is about you, not about me. So let me know what you thought of interview. FrankCurzioResearch.com. That's Frank at CurzioResearch.com. But just interesting points really quick to sum it up. Even at the last part when Andrew was talking about the markets and the bond buying and kind of all over the place, because that's where we are right now. I mean, they're buying bonds of big name companies. Valuations are surging. You need the government to continue spending, or this market's going to crash probably more than 30-40% here. I mean, the earnings just don't support it. They support it for some of the companies, but not all of them. I mean, I'm curious to see what Apple's going to report. Hopefully their services are really killing it, because they're giving away their 11 for free right now if you sign accounts at T-Mobile and AT&T and things like that. So, it's interesting to see what is going on. And now you're seeing the Fed buy, high yield debt as well. But what's different from this and what's compared to the credit crisis was a complete unknown. I mean, the banks completely fucked up, and they were not telling anyone anything. And nobody even knew AIG was insuring the whole entire world until later on. I mean, you look at a crisis where it really hit. This is, Lehman going bankrupt. AIG wasn't really part of the story yet. That was like September, I think. Late August, September with Lehman going bankrupt in 2008. But the thing is, nobody knew what was going on. Today, the Fed, the president, they're meeting with the bank's executives every week and have them on speed dial and saying what's going on. And these banks, since it's not them, they're stronger than ever thanks to, all the laws that were in place because they messed up so bad. And even the stress test proved that for most of these banks. But they're saying, listen, the small high yield market, man, that thing's going to crash, right? It's nuts. They're talking about, different loans every place that are nuts. They're talking about, here's other markets you have to be concerned about. And that's why it's more where they're not being forced to react after the fact, but before this stuff even happens, because the high yield debt and purchasing the high yield debt wasn't even on the table when they came out with the $2 trillion stimulus. Then all of a sudden it went from $2 trillion to 2.4. Nobody blinked an eye. That extra $400 billion. Think about that. I mentioned in that interview with Andrew how TARP was $480 billion. That's how much it wound up being when all was said and done to backstop the entire financial system. We added $400 billion to that $2 billion stimulus, which is supposed to be $2 billion, like overnight. Nobody blinked, like it was nothing. And you're looking forward, it's just the beginning, guys. We're going to see much, much more spending. All the central banks are spending. Just, Evercore Research, great when it comes to the economy. One of the firms that I follow, get at sell-side research that's expensive. But, just highlighting, there was 19 initiatives just this past week of companies either lowering interest rates or just initiating some kind of stimulus for central banks to stimulate their economy. And that's not stopping anytime soon. So you could hear even in Andrew's voice how it is confusing. It's not that easy. You're hearing lots of ideas that he shared with you, which I love. I love when everyone shares ideas with you. And of course, we take one of those ideas that I think is the best one out of all of them, and we put in our Dollar Stock Club portfolio, which is one of our cheapest newsletters out there. So if any of you are interested in that, you can go to our website at curzioresearch.com. Now, let's get to my educational segment. And it's on gold. I know a lot of you own gold. It's an industry that I followed for over 15 years, and especially in the past 10, I just visited so many more projects in this industry than any place else, than any other industry, I would say. And I do a lot of traveling, and I do a lot of hands-on research. If you're a new subscriber or a new listener, and you're not, whatever. If people who follow me for a long time know, I'm just going to send you pictures of places that I've been. I believe in hands-on research, boots on the ground. That's where you find out the best information, not by reading something someplace that anyone else could read, because it's usually factored in. You want to be at these places. They're not just talking to management, but try to talk to their employees, right? Because every management team that I ever talk to is always going to talk positive about their company. It's natural. I'm going to do about Curzio research. You're going to do it about your company. You want to get a perspective from both sides. And sometimes it's employees, sometimes it's people that are bearish or something. But when it comes to gold and the access that I've been able to give you because of knowing the right people in this industry, because, man, this is one of the craziest industries in the world. I mean, it's like crypto. It's similar to crypto. It really is in terms of fraud, in terms of people getting destroyed, in terms of people lying about what they're doing, backstabbing. And I worked on Wall Street, man, for a long time. You can't even compare it to the mining industry. It's everyone's looking to generate huge profits right away. And it's crazy. If you listen to the wrong people, you can get in a lot of trouble. But right now, where gold is, and we're pushing 1,800, pull back a little bit on those levels today. But, whatever, 4 or 5 year, whatever it is, closing in an all-time high. The gold producers have done great. Gold royalty companies have done great, which makes sense. They've been outperforming the entire market past 24 months because they're direct beneficiaries of higher gold prices, where they're actually producing, right, for the gold producers and the majors. That's why you've seen them go up so much. And royalty companies, the gold royalty companies, the big ones, if you're looking at Franco-Nevada, Sandstorm, Royal Gold, they were able to lock in amazing royalties on some of the biggest projects in the world owned by the majors, because the majors, a lot of those companies almost went out of business in 2013-14 when the market really, really crashed because they were so freaking leveraged. They were buying stupid projects that weren't profitable at $2,200 gold prices. So they needed money, they needed cash, and that's what royalty companies do. They're basically finance companies. They don't produce anything. They're not producing anything at all. They're just finance companies. And, they finance a project and, hey, we're going to give you money for this asset. When it's producing, we get to buy the gold for $300. And they have all kinds of, stipulations where, again, there's so many deals, and you have to really structure these deals. You need someone who's amazing in finance that understands this stuff, but they could really get whatever terms they want back in the day. Now royalty companies are having a ton of trouble. I mean, companies are launching, the royalty model. I've seen some companies where a lot of these projects won't be producing for 5-7 years, and they're going up 200-300%. But this isn't about gold producers, because we own Newmont Mining for our portfolio for well over a year and a half. We did fantastic, up over 100%. Got into that earlier than most people. Gold royalty companies have been doing great. But let's talk about the one area that hasn't really performed until the past, few months. And that's junior miners. And guys, this is a market where many of you may not have been part of a bull market in this. It's supposed to be a cyclical market, but it's been so horrible for so long. And some names have done well over the past 12 months, maybe even 18 months. Some, not many, only a few. Now, these are companies, they're very early stage companies that are not going to produce gold, or their sites aren't going to be developed pretty much for over 10 years. And one out of every 3,000 projects, guys, think about this when you walk into the PDAC and you see 30,000 companies or whatever that are going to pitch you on their projects, these junior miner companies. 1 out of every 3,000 goes from the early start where you're planting a flag in the ground to actual production. Pretty crazy stat when you think about it. So why is this industry doing so amazingly now? Because they own assets that you really need to see 1,600, 1,700 gold, 1,600 probably around there to really be worth it. I mean, they'll have these studies and say, look, at 1,250, 1,300, 1,350, it works. But remember, it takes 10 years and hundreds of millions of dollars, sometimes even more than that, to build up these projects. And you're not going to take a chance with gold at, $100 more than where their PA studies suggest that these mining operations, and these drilling are going to be profitable. So now when you have 1,800, a lot of these companies, these junior miners, they all of them were modeling for 1,350, 1,250, right? This is what's going to be our project at 1,250, 1,300, and we'll be we're looking at 1,800. I mean, you're talking about companies that were not economically sound and would never get developed to now these projects look incredibly attractive. Some of them still don't. I mean, some of them in the middle of an area where, the government could just take you over. It's crazy. You have no infrastructure, which costs sometimes tens to hundreds of millions to build. Water, plants, electricity, all that stuff. Nobody talks to you about that. But there are junior miners in the right space. And two of the names that I love right now that I want to share with you, and I'm going to give you, just the format of how to look at companies, because a lot of these names are trading at 52-week highs, still down from all-time highs, well below all-time highs. But one of the names hesitant to give you because we stopped out, and I was wrong on this one. And I hate giving you stocks and people lose money. It bothers the shit out of me. I can't sleep. That's just the way I am because I care. But Orn Resources, I've had Ivan B back on a lot of times. That stock is just going up and up and up right now. But that's a company where, look, we recommended it early, which means we're wrong, right? Early means wrong in this industry. But spent a lot of money to develop these projects. But these projects that they are in with Orn Resources, with Ivan B back, these are super high grade gold projects. And it made sense at 1,450, 1,500. And then 1,600, like, wow, 17, 18. And I told you guys over a year ago, and this is even before COVID, with the amount of money being spent and they're not pulling back governments, gold's going to 2,000. COVID just pushed it much, much faster. Way over 2,000 with gold. Just makes central banks, they're not done. I mean, we're in like the third inning of spending here. And it's resulting in anywhere from 15 to 50%, if you're Italy, of GDP that's been spent on fiscal and monetary policy, where the U.S. is at 30%. But most countries are over 15%, and many are over 20%. And it's going to continue. It's definitely going to continue because the earnings aren't there. We're pushing everything out to 2022. That's the only way to support the markets, which means that's going to be very good for gold and even Bitcoin. We're going to see Bitcoin surge as well. So Bitcoin has been doing well, pulled off from 10,000, probably 92, 9,300. But getting back to gold specifically, when you're getting back to the junior miners, this is a market. Yeah, many of you maybe listen to this and you listen to me for 5, 6, 7 years. But those of you who have experienced a bull market in junior resources, when that cyclical market turns, you know what I'm talking about. These are stocks that don't go up 1x, 2x, 3x. They go up 5, 10, 20x. It's normal when it happens. It doesn't happen often. Right now, it's starting to happen. Now you have the wave behind you. You have a lot of positives. The trend is in your favor. Yes, we're going to see gold prices go high. The government's going to continue to spend money. You're looking at the majors that underproduced tremendously. Now they're generating more profits, record profits than they ever generated, and they need to buy up assets right now. They need to. And now they're going to look at the juniors, and with prices where they're trading, a lot of these guys upgrading those studies from saying, hey, this is where we were at 1,450. Now here's where we are at 1,700. Now these companies are worth taking over because that's what the junior mining market is. That's what it's built on. It's built on you just drilling and providing that asset and more details. And the goal is to get taken over by a major. The goal for 99% of these companies is not to develop these assets and go crazy. No, that's not what they do. They're looking to sell these assets to majors. But Orn Resources is one name that I love for a long time. Ivan B back is just a big owner of the stock. He's always been up front. I love this guy, someone I trust. I don't trust a lot of people in this industry. The other one is gold mining, a stock that Amir's come on numerous times on this podcast. If you bought it any time, you're definitely up because it's at an all-time high. The reason why I love that, and Amir's a great friend, which has nothing to do. I don't get paid for any research from anyone. If I don't like your company, I don't care if you're my best friend. I'm going to short it on you. I mean, that's the reputation we have, right? Where people trust us. We're an independent research firm. We don't get paid by anybody to recommend their stock. But when you're looking at gold mining and the projects that they built up, and now they just turned into a royalty model, which was incredible because, I won't get into too much of the details because I really got into the details on my on a special exclusive interview with Amir to my Curzio Venture Opportunity subscribers who are doing very, very well on that stock. But I said, here's why this is a big deal. He just announced it, but they have such a huge portfolio that now if they decide to sell out certain projects, they're going to be able to keep the royalties on those projects, which is amazing. It's a different business model. People are loving it. And I didn't understand it at first. I thought, it's just like a kind of .com thing where you just turn into royalty because they command a higher premium. No, it's because they're sitting on massive assets, 14 projects. And now with gold prices going higher, maybe half of those where the economics worked at 14.50. But at 17, 18, all of them work. So those are two names I wanted to share with you, two names that I like. Again, Oren, we didn't do well on. If you listen to, it's doing well now if you held on to it. I know we stopped out in our portfolio, which was good because it went down a lot further. Again, junior miners are now in favor. If you're going to buy them, guys, you need certain characteristics. You need them. You need a great management team. You need high insider ownership. Okay, these guys got to be in the same boat that you are. That's both of these companies. You want to make sure they have great projects. All right. That's very, very important. Also, even those projects, you want to make sure there's infrastructure around them because that can amount to tens to hundreds of millions of dollars to build that infrastructure. So that management team, you want to make sure they're in good jurisdictions. That's these two companies. You don't want to buy a great asset that's worth a fortune if it's in the middle of Beirut because the government could say, hey, we're taking over the whole project and good luck and your stock goes to zero. I've seen it happen. It happened numerous times in this industry. So those are the things you want to focus on. It's not too hard to find that. You can go to their websites, do their presentations, make sure that insider ownership is good. And also, what you're going to see in both of these companies, you want to see if there's a major that's already invested in the company, if they already took a stake. That means they're interested. They're interested to see this thing develop. And they're interested in the project, and it's going to make it a lot easier for those guys to come in and buy the whole company. So that's Oren Resources, AUG, and then you have gold mining. And yeah, we had Amir on numerous times. So if you follow, that's very good. You can also buy gold mining on the over-the-counter exchange, which I don't recommend. I'd rather you go on Toronto Exchange. So it's GOLD.TO as a symbol, but you can also find it, and it does trade pretty good volume, GLDLF. That's for people who have trouble buying on Toronto Exchange in some of your accounts. But those are the two stocks I'm looking at right now that look good. But if you're going to start doing your homework now, yes, you're going to see these things up and doing well. But remember, when this industry turns, again, a lot of the people listen to me that have 20, 30 years experience in this industry that have lived through those markets. Holy cow. They make up for 7, 8 years of negative returns because those returns can make you rich and it doesn't take long. It'll take 12, 18 months and you see 5X to 10X gain. The risk reward is tremendously in your favor right now for gold and junior mining stocks. And you're going to see a lot more of those companies make their way into our portfolios at Curzio Research. So guys, questions, comments. I'm sure you're going to have a lot. Had a lot last week with my rant, just telling how it is. FrankCurzioResearch.com, positive, negative, whatever it is. Stop talking politics and this is a investment, whatever. Keep them coming. It relates to your investments. Believe me, you need to understand what is going on out there. And companies just throwing Facebook under the bus here, which maybe they deserve, but the companies that are doing it and everybody just trying to further agenda on what's going on right now when in reality, most of these people don't care. It's just sad. I see it a mile away. I grew up in New York. You smell bullshit right away. You learn that. But it's just incredible to see what these companies are doing and just playing so many people. And it's very, very sad, especially when we have such a great movement going on right now. So again, questions and comments, feel free to email me, FrankCurzioResearch.com. Thanks so much for listening. As always, appreciate all your support. I'll see you guys in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.